with us. I'm still with Mr. Kayemba. We are trying to break down a few results of companies that released their annual results for the financial year ended 2021. As we move also to the end of the financial year of our economy, that is Uganda. So we before we went for a break, Mr. Kayemba, we wanted to know, for example, if stock markets in, for example, Kenya, where elections are going to happen, where we have price inflation, where we have the Kenyan shillings weakening against the dollar.
Yes.
How do all these factors affect directly the share price or the turnover of the company?
Yeah. So first, let's talk about stock prices.
Yes.
So a stock price reflects the amount of risk.
Yes.
Yeah. I'm going to take to invest in this company and the return I expect. Yeah. So in periods of uncertainty, you're talking about elections, you're talking about high prices due to significant other factors, like supply chain issues, fuel prices.
Yeah.
In times when inflation is quite high, so investors want a higher return. They look at a higher return for them to be able to take that risk. And if you're not offering that return, they usually take away their money. So that's why when in periods of elections, you find money going out of economies because investors are selling their positions to go and invest elsewhere because of uncertainty. I do not know what is going to happen to my company tomorrow, or I do not know what is going to happen to my my investments. So that kind of uncertainty, yeah, drives investors' decisions. Yeah. So even as forex rates, yeah, you talked about the Kenyan shilling weakening. So the Kenyan shilling has had its own pressures. So fuel costs, yeah, the costs of importing goods have been going up. Yeah, fuel. You also talk about something called depegging. They depeg the Kenyan shilling from the dollar. So that has seen a downward trend in a depreciation of the Kenyan shillings. Look at very many metrics before they decide to invest. And if Kenya is offering not so good rates at a high risk, there is a high chance I'm going to move my money to Tanzania, Tanzania, or go to Ethiopia, or go to Asia. So that's what drives such things: sell-offs of shares, and you find markets in a downward trend. Yeah.
Does that have any? Because we are seeing that in Africa, most of our stock markets, the investors with biggest shares and stuff are foreign.
Yes.
Doesn't that also directly now come back and exacerbate or aggravate the problem? Because these investors, as they pull out their money, they are taking back to their countries.
So I would love to look at that with a bit of a pinch of salt. So in Africa, most investors actually are local pension funds. People that might not know that. Most investors.
Okay.
So you might find NSSF holding huge positions in these listed companies. So most of the investors are actually local pension funds. Yeah, but they are also foreign investors.
Yes.
So, yeah, and yes, there are periods when people have to adjust their outlook on certain assets, but it doesn't specifically mean that because Africa has too many foreign investors that you will find people always moving out their money in periods of uncertainty. Yeah.
Okay. Wow, good. Let's first have a look now at National Insurance Corporation for their financial statement. We seeing, because an insurance company is not a business like you can talk about British American Tobacco. So we're not seeing any revenue or something. So how do we understand this statement?
So the way most financial sector businesses, the way their statements are structured, you see first the income lines. After tax or a loss therein. Yeah, but revenue is generated from writing insurance, so premium, they call them premiums, yeah, reinsurance, yeah, on other premiums, and commissions on certain kinds of assets. So those are characteristics you usually find in financial services businesses. So they are quite unique in that sense. And also their balance sheets are written to reflect liquidity in order of most liquid assets. Because liquidity is very important in a financial services business. Yeah, you're dealing with usually money of third parties, so you have to have a sizable provision available in case to meet your liquidity needs. Yes, but yes, but we have good metrics for NIC. I must say, if you look at the stock and you start top down, let's start from the current market price. So it's trading at 6.2 shillings. Yes, and I must say it's the lowest on the securities exchange. Yeah, but that reflects also other things. I must, the company had a lawsuit with Makerere. That issue also greatly reduced because they had to pay huge sums in legal fees. It reduced, it affected them significantly. They weren't able to pay a dividend, and even this year they are not paying a dividend. But this year it's a different case. It's a regulatory case. They didn't meet the capital adequacy ratio set out by the insurance regulatory authority, so they can't pay a dividend. But the company actually has good multiples. If you look at their free cash flow, price to free cash flow is 0.014. That's very low, and I would say the price is quite good. Quite good if you're looking at the company. You also have a 2.75x price to earnings. So they are making money. They are making good money when you compare that to their stock price. And their market capitalization and number of shares. Yes.
Given the fact that someone sees the company with the lowest share price, we have been looking at BAT with the highest. But also someone could look at the one with the lowest and be like, are people not trading on this company? Is it something to worry about when the price is really, really low as 6 shillings?
So yes, prices, it's good to worry about prices, but it's also important to worry about the value of the company. So value has also to be looked at. It includes lots of things: profitability, generation of cash, size of assets, such things. How is the company performing? So as you look at its price and get worried that this is so low, this is so low, you also, it's important to look at the value of the company. What is the outlook for the future? So as BAT might have a high price, it still has a negative 10.6% cumulative average growth. But CAGR for NIC is 7.26%, so their revenues are growing at a steady rate. This is even comparable to MTN, I must say. But when you look at prices, it's also important to look at what value does the company, what environment does it operate in, what business is it doing, what are the return characteristics of such businesses. When you're looking at insurance companies, what affects them. So you have, for insurance companies, you have things like write-offs for insurance contracts. They have not generated write-offs for insurance contracts or expected credit loss. We took a position in this asset, but we expect that it might go down. And also banks. For banks, you look at they also have such lines like loss expected on the loans they have written. So it's important to look at such metrics.
Not just the price per se.
You don't look at the price only, but also the value the company brings. Yes.
Now, National Insurance Corporation has been on the market for quite a long time.
Yes.
And I don't know if they have declared any dividend in the past, but at least what I can say is that they're not giving out a dividend this year.
Yes.
How else am I going to benefit as a shareholder now?
So they have been giving out dividends in the past.
Yes.
So there's some years, 2017 I guess, they did not give out a dividend, but usually it's around 1 shilling. Yeah.
One
shilling. And if you compared 1 shilling against the current market price, it would actually be a good dividend. But this year they are not giving out one. So that's what usually informs the investor decisions, because if I am looking at a 1 year period of investing and you're not paying a dividend, we do not have a good volatility on the price, so I might not take a position in such a company. So those are some of the key things that drive decisions. Important to look at. Yes.
Yeah. Moving down to their assets and of course their liabilities, do we see anything that is significant to note?
Yes. So when you look at a balance sheet, most important things you have to look out for is liquidity and solvency. Okay. So the size of liquid assets. Yeah. The size of liquid assets. Yeah. So with you look at receivables, cash, and financial assets that they could sell off within a certain period of time. And if there is growth, which we can see here, there is growth, so there is a reduction in cash, but there is growth in financial assets and also other receivables. So such kind of metrics are the ones you look out for on a balance sheet. Yes.
So in the end, as we look into the future, still you can advise people to still invest in National Insurance Corporation?
So, as I had said earlier, I would want people to base their investment decisions
on your opinion.
Yes, in my opinion. Yes. Look at the statements and gauge. To educate yourself. How do I look at a statement and decide to invest? But a growth of 7.27 looks good for the company and is profitable for the previous 2 years at least. So and it has good price multiples. So such metrics are looking good for the company. So you can't base that off and try to extrapolate. Look at the future. What does the future have? What is the future for insurance? And is NIC taking strides to make sure they are part of the future of insurance? Yes.
Well, the challenge with many Ugandans, they want to invest and get returns tomorrow. Today invest and get returns tomorrow. But what principle, like you said, can you use to actually gauge the time and the patience that you need in investing in the equity market? Because we can see it's very volatile. Today prices are down, the other day they are up, the other day this is happening. So what should someone do really?
In an equities market, the important thing to look at, volatility is good. Volatility is good. If a stock price went down, you would have to reevaluate. Look at, has the company changed significantly? If it hasn't changed and you still have the same appetite you had when the price was up, then it is better to buy at that point so that you can average out your previous high price. So that's what makes volatility good. And it's very difficult. I must say, on average, to expect double-digit returns when it comes to passive investments. If it's a double-digit return, then there is some sort of high risk entailed there. Yes, huge sums of money are usually in private equity, small businesses and startups, but there are also some risk involved in that. So when you're looking at equity markets, to have a long period of outlook period, yeah, you're passively investing. You're not involved in the daily activities that go on in these companies, but you're trying to invest in something that has a negative correlation with what you're already invested in, or grow your savings. So returns of tomorrow, those ones, I don't think anyone should expect returns of tomorrow.
Yes.
In any business, yeah, there's always a cost to a business, and there's always revenue. So if you expect to have 2 times your money the next day, then there's a serious problem. Serious problem.
Banks have had a challenge this year, including Stanbic Bank, who restricted them to give out a dividend. In such cases, do you think shareholders have a say or something they can do to change that? Because as a company, it has declared that there's a dividend, but then they are restricted.
So the Bank of Uganda took that as a regulatory stride, yeah, to try to protect the economy during the COVID-19 times. So you can't say it was for the better. Yeah, try to keep liquidity within the companies. Try to make sure they are properly capitalized. Yeah. So yes, as a shareholder, it is not good for you, but then they are trying to protect your company. Yes. So and I must say the Bank of Uganda actually, yeah, changed its stance on that on the previous monetary policy statement on Friday, previous week, Thursday, Friday. The banks will be allowed to pay dividends for this financial year. Yeah.
Wow, that's good.
Yes.
That's really relieving. So, in Stanbic Bank in particular, has the dividend been declared yet?
I'm not particularly certain about that, but they on their recent annual general meeting, they declared that they will be paying around 100 billion shillings.
Wow, worth of dividend
for 2021 and 2022.
Oh, wow.
If you can look at their post-AGM statement, that is on there.
Wow, that is beautiful. Now, as we just conclude, what word of encouragement can you give to people who are young, still young adults, people who are in campus, then people who are already working, and people who are now old age, in terms of investing in capital markets?
I must highlight this again. I usually try to refrain away from giving people advice, because advice is very subjective. But from a statistical perspective, there is historical returns in investing in equity markets, and as a young person, you can absorb the risk within an equities market. So money, when you invest and reinvest in such assets, the return they give you keeps on growing from a statistical and historical perspective. So it is important that we start early, look at these companies, what are their return characteristics, what do they offer to me as a person, then you can make a decision and invest.
That advice, it's not advice necessarily. I know you include the statistics and all that, but yes, still advising people actually who are younger to invest in equity markets, like you say, they are long term. How about the older ones? Should they quit and start, investing maybe in bills, treasury bills, short term?
So as you grow older, usually the risk with equities takes time to absorb. So it might not be good for you as an old person. You're looking at a short time. I wouldn't want to say that, but usually your risk appetite, you want to preserve your capital. You've generated it over a period of time, and bonds and bills and fixed income is usually looked at as risk-free.
So safe investments.
They are safe. You can buy bills, but if you have the capability, because there is willingness and ability to absorb risk. If you have the ability, and ability is important, because I might want to buy stocks right now, but I don't have the money to buy them. And it happens with our age and our income. income profiles. Yeah, so it happens. I might have the willingness to buy stocks, but not the ability.
Yes.
So as an old person, I might have I might not have the ability per se, but the willingness. So I can weigh that and say, yes, let me buy shares in, and you can give them to your children and grandchildren. Yes, because they are your assets.
Yeah.
Yes.
And there's, when you talked about that as transfer, right?
Yes.
I remembered something like using securities as collateral. How does that work?
Not particularly. Yes. Well versed with such kind of arrangement, but securities are an asset. So I would understand if a financial institution used them as a collateral for you to get capital. Yes.
Wow. In conclusion, SBG is coming up with an app. What should we expect briefly in terms of, you know, what convenience this may bring to, you know, Ugandans trading on the securities?
So as the market continues to evolve, there are going to be different products that are coming out. And it's important that the markets are brought to people so that they can understand and also benefit from them. So yes, in due course, if it's going to happen, the company shall communicate and let the market know about that.
Wow.
Yes.
Wow. Thank you very much, Mr. Kayemba.
You're welcome.
It was always a pleasure to have you.
Yeah.
You're a man of figures, but sometimes we diverge and, you know, get into, you know, subject matters. But thank you for sparing your time.
All right. Thank you for having me.
Yes.
It's definitely been a pleasure being here.
Wow.
Thank you. You're welcome.
Thank you very much, ladies and gentlemen. Now, that was Mr. Kayemba Isaac. He's a financial analyst from SBG Securities, and we were talking, you know, financial reports and results for pt2 Uganda, as well as NIC, that is National Insurance Company, which were released not so long ago, and a couple of other things concerning stocks. I hope you learned something. As a shareholder, as a prospective investor, you always have to understand the finances of the companies that you're investing in. It's a must. You must know how the companies are doing. You must see into the future. And that's why we bring you some of these experts to give us a little bit more insights into these companies before and after we invest, and what this means for you, the shareholder, the regulators, and other key players. It's been a good time having you here. We will go into a short break and we return briefly, but don't go anywhere.